please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The Bank Nifty went into the red and has again come back into the green. The mid-cap index has also given up most of its gains. And let's just pull out some stocks which have cooled off quite a bit from the highest point. Stride Shasun, see the intraday chart on that one. BEML is the other one where we've seen a bit of a move on the way down. Castrol is the other one. These are all FNO names that I'm looking at on the screen. Nalco, National Aluminium, that's also making a move lower. But really the story is in PSU banks. Union Bank, from the high of the day to the low of the day, it's taken hardly 10-15 minutes. So just pull out Union Bank's intraday chart. That's Union Bank. Just about 15 minutes back or at the start of the show, this was at the high of the day and now at the low of the day. So IGL, intraday chart of IGL, that one is also quite interesting because it's given up almost 3% of its gains. Still trading in the green, of course, but has cooled off. Adani Enterprises, again a stock, still trading in the green and by quite a bit, but still from the high point, Adani Enterprises has slipped a bit. So just keep an eye on some of these names. BTST Times, Ashwani and Mitesh with us. Ashwani, you go first. So on index, as you said, no follow through on either direction. So what would be a call for compulsive trader, and what about stock calls?
See, on the Bank Nifty, on that HDFC Bank news day, there was a huge bar on 4th of June. It started at 27,000 and ended at 26,200. Now the way we've seen this upside play out is fairly lame. So my sense would be that swing traders can keep a 27,000 type of stop and go short, because if that bar is not crossed, Bank Nifty has no life beyond 27,000, and we are sitting around the highs of the range. And Nifty, the way it's moving up 20-30 points, these sort of rallies don't sustain. Now the stock that is moving up right now is Bajaj Finance. So basically, if you are in those 5 or 10 stocks, you get follow through, otherwise you don't. What is interesting is Maruti, which is coming back above 9,000 after many days. So that's a buy with a stop of 9,000, target of 9150. BPCL you can buy with a stop of 410, target of 435. And maybe TVS Motors a buy with a stop of 578, target of 600.
Okay, so still a couple of buys on Ashwani's list. Mitesh, what do you think of the, I'll have to call it a bit of a sell-off because mid-cap index is almost negative now. What are you working with?
Yeah, in fact, I was not looking at that. We had a long trade on Nifty, which is close to stopping out at the cost. But for the timing, I still maintain a positive bias. So I have two BTST calls. Tech Mahindra is a BTST with a stop below 715. So 714.5 is what I would recommend. Look for targets of 735, 740. And UBL, I think, again, that's another stock which has come off in the last few minutes, but the overall structure is quite good. So take a BTST trade with a stop below 1260, and if it succeeds, I think it can even go to about 1325, 1330 on the upside.
Okay, so UBL is the other stock that Mitesh is bidding on. A couple of these pharma names are moving lower now. I spoke about Stride Shasun, Divi's Labs and Torrent Pharma also moving lower. So just keep an eye on some of these names. Apollo Hospitals, after yesterday's big move, is moving lower. And on the way up, of course, Balrampur Chini is still holding on with gains of about 5%. And the other one which has been holding on to the gains is Chennai Petro. So that one also making a move. But as as Ashwani also pointed out, really Bajaj Finance, another 2.5% higher on that stock. So phenomenal on that one. But interesting, Surabhi, because we're all over the place really, and it's going to be that kind of a market for some time. 10,820 was the level that I was watching out for on a closing basis, and looks like it will have to wait for some time.
Okay, well, Neeraj, before we let you go today, your thoughts on one of the stocks that's actually been quite a steady gainer all throughout today, Bharti Airtel. Would you at all look at adding it now?
Yeah, actually, no. I think I still feel that there is a lot of pressure which may still come for the stock going ahead. So though results have been increasingly improving the last couple of quarters, then the downfall they saw earlier, Africa operations also they're thinking of monetizing some money there and decreasing the debt. But I still feel the domestic pressure, domestic competition will stay for them, and to make an investment call for a medium to long term, I think it's still difficult till you see a meaningful correction in the stock.
All right, Neeraj, thanks so much for joining us today. Good talking to you. Well, now let's move on. As promised, it is time for Midcap Mania. It's Monday, so let's find out what's on Nigel's radar this week. Nigel.
Well, as always on Midcap Mania, we're trying to explain to you the company. We're trying to tell you what the company does. Today, we have picked a stock. Remember, the volumes are relatively lower, and it's a holding company. The one we're talking about is Sumit Securities. Well, what does the company do? It's the holding company of the Harsh Goenka group company. So that's primarily why it's listed. In fact, what all is included in it? A whole host of stocks would be included in the Harsh Goenka stock. So we should pull a few of them up for you. And why exactly it did come on my radar is because the kind of correction we have seen from the recent peak. That's Sumit Securities. So let's get that as well up for you. If you take a look at it, the market cap's around 850 crores or thereabouts. But if you just see the way the stock has moved from the December 2017 highs, let's get these plates quickly up for you. The promoter holds rather a 74% stake in the company. LIC holds roughly around 2.5% stake odd. Now, from December 2017, Sumit Securities, which is a holding company of other group companies, well, that's lost nearly around 40% of its market cap. While the other companies, that's KEC, CED, as well as Zensar, they hold more than 1,000 crores in each of these companies, and those have corrected only between around 11 to around 30% odd. So yes, it's a holding company, so you expect to see a little exaggerated, correction over there. Well, if you're just putting the numbers up for you, in December 2017, the market capitalization was nearly around 1,470 crores. And if you take a look at the investment, it was nearly around 5,000 crores. So that holding company discount had narrowed down to roughly around 70% odd. Currently, it is at around 81% odd. If you look at the shareholding pattern, I as well was going through it, I couldn't really find how exactly do these numbers stack up. But Instant Holdings, that's a 100% subsidiary, so you need to add both together. One is Sumit Securities and the 100% holding company as well, and then these numbers will stack up for you as is given for you on the screen. 1 crore shares in CED, KEC nearly around 5 crore shares, and in Zensar, that was otherwise a smaller holding, the stock has moved quite well. That's nearly around 87 lakh shares, and the values are given as well. In addition to that, other smaller companies where they hold roughly around 50 crores, 45 to around 50 crores odd. So just putting everything down and stacking up that numbers as well for you. The market cap, well, it's around 855 crores. The value of the investments is nearly around 4,500 crores. So it's telling you it's at around 81-82% holding company discount. And if you had to give these holding company discounts, well, at 60%, it would be nearly around 1,800 crores. At around 70%, it comes down to around 1,300 crores or thereabouts. And that's where it is currently at around 81% odd. So finally, just pulling up the, the final chart up for you on the screen, you'll see that the market cap is around 850 crores. And in addition to that, they have around 40.8% stake in Spencer and Company Limited. Now, this is separate from Spencer Retail. There is no relation with this company, that's Sumit Securities, and Spencer Retail that we're all aware of. Spencer and Company Limited is basically the hotel chain. We're not giving any value to that because not a lot of numbers are out there. I've written to both the managements, but we couldn't really get. There are around 3 hotels that they are functioning, and they have 40% stake in that. That's how the numbers stack for you. As always, not a recommendation, just an interesting tidbit. And today we're saying that the holding company has corrected more than the companies where it holds a stake.
Okay, Nigel, thanks a lot for that. And yes, that clarification is important. This was not a stock recommendation, just interesting research that Nigel has done. The mid-cap index, by the way, is now in the red and down about 10 points. The Bank Nifty also slightly in the red. Again, Ashwani, could this be a case where the market has now gone to the higher end and has sort of rejected that, especially on the Bank Nifty?
Quite possible, because if you are losing momentum towards the higher end of the range, then all you need is a little push and you can come tumbling down. So market is losing momentum anyway. Now we can blame it on Donald Trump, Kim Jong, whoever you like, but it's clearly the momentum is getting lost.
So, Ashwani, I was just going to ask a follow-up. In that case, if we're anyway at the higher end of the trading range, then is the Nifty itself a good short now?
See, you generally tend to short once something starts to collapse. because if it can still hang around another 3 days here, and then you kind of get tired, but it's clear that it's somewhere near the top. So whenever you get your gap down, maybe as early as tomorrow, you can easily get on the short side and your stops are fairly clear.
So Anuj, I guess for the bulls this would go down as a disappointing day, right?
Yeah.
They had everything going and then now completely different picture.
Again, if you're looking at only the day to day, Friday we had a big gap down and the market bought it twice. So short point, Surbhi, is that this is not a market in which if you chase, you'll make money. Today if you're chasing market at 130, from that point you lost. On Friday, if you're chasing on the way down, you lost. This is a market which has now given you a well-defined range, and you have to buy the dips, sell the rallies till the market has a trigger to take out this range. As of now, there's no trigger for the market. Right now, there's no trigger for this market to go to its previous high, but at the same time, right now, there's no trigger for this market to break down either. So you'll have to be in this range for some time, and within that, you'll have to find your individual stocks and be careful about the stock that you're choosing.
Oh, absolutely. Okay. On that note, let's take a break. We've got 15 minutes to go. Let's see what those last 15 minutes of trade bring. Welcome back. So we have lost a lot of ground from the top. There's just a little speck of green now left on the Nifty. Mid-cap index and the Nifty Bank are flirting with the flat line at the moment. Mayuresh Joshi of Angel Broking is with us. Mayuresh, I want to first start up with a couple of these gas stocks, because Friday and this morning there was a lot of excitement. Both the city gas distribution plays and even stocks like Petronet LNG. Some of that is now changing. What is your view on gas stocks and which ones do you like?
So afternoon, Survi. Again, I think the gas distribution story probably still remains intact over the longer period of time. What you probably witnessed in the quarter and the year gone by, that the volumes have remained extremely stable for these gas distribution companies. And again, I think the gross margins have largely been stable as well. So if you look at the price increases, specifically in terms of domestic gas pricing and the APM pricing, and you compare that with the cost of alternate fuels like petrol and diesel actually moving up substantially higher, though you've seen price cuts over the past 10 days. I think the dynamics in terms of a cleaner fuel and the consumption of both CNG and PNG on the rise is going to abet their volume growth substantially higher. Having said that, if you look at numbers for IGL, MGL, you're probably looking at volume growth in excess of 10-12% over the next few quarters and years. What you're probably looking in terms of addition of new cities is going to abet their expansion as well. And individually, again, I think MGL, for example, they're probably adding on 20 CNG stations. You're probably looking at IGL with the additions that they've done, and the expectations of volumes to be around 6.25 SCMD, along with gross margins around 13.5, $14 per SCM. I think that's basically going to abet their earnings growth substantially. Similarly, in the case of MGL, for example, you're probably looking at volume probably sustaining around that 3 SCMD mark. And again, EBITDA margins on the cross side, probably around that 14 rupees SCM. So yes, I think there is an earnings scope over the longer period of time, and we do remain optimistic on stocks like IGL and MGL.
Okay, by the way, just some more names. PC Jeweler has now given up half of its gains, so was up 10% in the morning and is now up about 5%. Also keep an eye on CG Power. That's again making fresh lows intraday. Just pull out the stock. And Nalco, interesting because there's remember the kind of huge run that Nalco had about 2 or 3 months back. Today's chart is very interesting. It's just a trending lower chart that you've seen. 3% lower is what we have on Nalco. Ashwani, take a look at Nalco's chart.
See, metals have kind of dropped out from the global rally. So Nalco generally tends to be the best performer when things are good, and possibly starts to underperform as soon as there's a bit of correction. Still range bound, bad day. If you get it around 61, 62, then it's a buy. Good day around 90, 91. Over there it's a buy. But overall the sector does not have quite the same mojo that it had earlier.
All right, let's take another quick break. We've got about 8-9 minutes to go before the day closes out. As we take the break, do hear out what Andrew Holland of Avendus Capital Alternate Strategies thinks of the market at the moment.
The macro is looking bad and the micro is looking better. But unfortunately, a lot of the market consensus for earnings for this current year was around 25% earnings growth, and that's being brought down to around 20 so far. We're at 15, and we think earnings will be again brought down. I think some of the pain that's been felt in mid caps and small caps is probably here to stay. The easy money was made last year, 2017, and I think all kind of mid or small cap stocks were kind of tarred with the same brush of they're all multi-baggers, and with probably not a lot of to back that in terms of either the management or the businesses. So we will see that differentiation taking forward, but unfortunately on the way down it brings the good stocks as well. So that will be the opportunity, but the pain of that happening is very acute. Expectations are for 25 basis points, but really it could be more, and it could be more because one, the jobs data is so strong in the US, inflation's picking up, and they really are behind the curve on this quite considerably now. I mean, we're still at easing rather than we're at tightening. If you see anything more than 25 basis points, then the market's not expecting it, and that would bring global markets down, but also more importantly, it'll bring emerging market currencies under further pressure as the dollar gets stronger on the back of that.
Welcome back. You'll say that the bulls would be slightly disappointed with today's trade. Though the market's not fallen a lot, but from the high point it slipped, of course, quite a bit. And once again, you're not able to take out 10,800. 10,820 actually was the level that we were watching out for. But after going above that, almost going to 10,840, the closing the last 15-20 minutes has been a bit disappointing. Let's take some final thoughts then from our experts. Ashwani, in the morning, you said that perhaps today was not a good day to buy Reliance after the kind of rally that it's seen. But does it remain a strong stock? Would you want to buy it on dips?
See, it is a strong stock, but how else do you bring down the market at a resistance? By selling into Reliance. So my sense is it could have a 2-3 day type correction before it bottoms out. So I would think buy it on declines, but that decline should be about 2 to 3 sessions.
Okay, as the day closes out, Mayuresh, we just have about 3 minutes to go. I think you do have a mid-cap pick for us. So run us through LT Foods and why you like it.
So Surabhi, I think the logic here is that the market leadership position in the basmati rice market in India, with their flagship brand Daawat having a 22% share. Their brand Royal has a market share in the US markets as well. But what you're probably looking in terms of the distribution network, 140,000 retail units covering towns of more than 2 lakhs. You've probably got 3,000 odd wholesalers. You've got the modern trade network. You've got multi-channel stores as well. But what you're probably looking in terms of value-added products like the brown cook rice that they've introduced in medical stores, what they provide to hotel chains and restaurants, they've got a 50% market share there as well. I think the top line growth around 12% should be quite reasonably achieved over the next few years. What you're probably looking in terms of margins being curtailed in the quarter gone by because of the expansions that they've done in the European and US operations, which also led to higher depreciation. But a large element in the margins being stable around 10.8, 11% is probably the best case scenario for us. What you're probably looking in terms of the bottom line growth of 17% should propel its earnings growth. So our own estimates is an EPS of around 6.1 rupees by FY20, which means that the stock probably trades around 11.5 times FY20 numbers. In terms of what they're probably doing in terms of value-add products with the Japanese JV, they're probably looking at snacks specifically in the rice-oriented markets. So I think expecting stable growth to probably come through LT Foods. So a staggered way over the next few weeks is how I look at long-term investors looking at this stock.
All right, Mayuresh, thanks very much for joining us on the show today and also giving us those stock ideas. We are down to about 2 minutes getting into close. So, Anuj, not quite a Monday for the bulls, right?
Yeah, but again, on a Friday, perhaps, the market started with a gap down through the day. It was down, but last hour it pulled up. Today it was down. It was up for the rest of the day, yeah. But towards the end it fell. I think the message of the market is that we are in a range. and let's respect that range. The market has to break out. I think it will tell us. For now, of course, in terms of stocks, at the index, perhaps your stock of the day today was Bajaj Finance. I know Bharti Airtel was the top gainer, but in terms of the profile, perhaps Bajaj Finance stands out more. Also been a big gainer this year, up 28%. Bharti, of course, as I said, was the top gainer, up about 3.3%. Grasim, Ultratech, so cement stocks did well. Large cap pharma still stood out. So Sun Pharma, Dr. Reddy's were both higher. Maruti was higher. Maruti, in fact, made a move after a long time, so 1% higher on Maruti. And HPCL was higher. On the way down, Tata Steel was down. HCL Tech a bit soft. ICICI was all over the place today, ending with about 0.5% loss. And Reliance, after starting strong, is ending with minor bit of cut. Well, 10,780 is where we are closing finally, Surabhi.
Okay, on the mid caps, again, all over the place, literally. If I talk about the losers, because the index has ended with a cut of about 26 points, it's lost a lot of momentum from the top of the day. If I talk about the key losers, then you have stocks like Strides Shasun, Ashok Leyland, even some of the gas names, by the way, IGL, lots of selling towards the end of the market session. So GSPL, IGL, a lot of these stocks have cooled off. Mahanagar Gas managed to retain some of the excitement, but even Petronet was down and out today. So gas stocks not quite retaining the morning excitement that we saw. Then it was a turn of a whole clutch of PSU banks. So your Bank of India, Canara, Union Bank, most of them have ended with a drop of about 1-2%. Not too much damage, but again, quite a bit of loss of momentum, if I could call it that. Then you had some other stocks like BEML, which was down and out. Castrol was down from the word go, and that picture didn't change even towards the close. So about a 3% drop on Castrol. However, all is not lost. If I talk about the gainers, you had some interesting high flyers. So Jaycorp has finally ended on a 20% circuit. The question is, will it be really sustaining? Is there something really fundamentally coming up or not? Pull up Reliance Industrial Infrastructure as well. It's twin when it comes to these kind of moves, and 11% is what you got today. Alembic has managed a decent gain for itself, about 11%. Actually, there's an interesting sort of change. The price that I'm seeing on the NSE is about 11%, and I think that's the BSE price. So, okay, bit of a, I think, dichotomy coming in over there. Perhaps the rates need to refresh on my screen. Moving on, sugar saw some buying. So Dhampur, Balrampur, these were stocks on the higher side. Manali Petro managed about 9%. Central Bank of India was an outlier, a 6% up move on that stock, while the others were down. You also had the likes of PC Jeweler and Vakrangi moving higher today, 63 Moons moving higher today. So all kinds of stocks were on the upside list. But very, very muddled trends. And I guess, Anuj, some of the bigger stocks, like Ashok Leyland, I mean, them sitting out of the rally, perhaps that kind of told us something.
Oh, yes. I mean, I was perplexed, actually, why I threw that Ashok Leyland was not moving when the rest of the market was moving. But, I mean, that's an aside. But, Surabhi, the point here is we're not wiser. We were not wiser after Friday. We're not wiser after today, essentially on where the market is headed. All told, once again, just to repeat myself, still a range. But the fact that we're not able to take out 10,820 on a closing basis, the risk of the market now having gone to the higher end and slipping from here does increase. But of course, everything changes if tomorrow you have a gap up and the market takes out that today's high. So it's really each day as it comes. Or you're an investor, you invest and you sit tight after that. These are the only two options that you have right now.
Okay, well said. Let's get Mitesh's final thoughts in as well. Mitesh, now where does this leave us for tomorrow?
Yeah, in fact, Surabhi, I started the day with some kind of a positive bias on the indices, hoping that this breakout will possibly see follow through, which has kind of failed. The Nifty comes back into the range of 10,700 to about 10,820. And the key here could be the Bank Nifty. I think we didn't have much of a movement on the Bank Nifty, very flat today. And I think 26,150, 26,700, 750 is the contour. I think once the Bank Nifty gets a directional bias, we might see some kind of follow through. But to me, I think most of the stock structures are still on the positive side. So I think come tomorrow, I think the next few days, in case we don't fall much from here, I think I would possibly again bet on an upside breakout happening maybe after 2-3 days.
Okay, all right, Mitesh, thanks for being with us today and taking us through market close. We need to take a quick break. On the other side, well, of course, tomorrow all eyes are going to be on that historic summit that will kick off in Singapore. President Donald Trump and Kim Jong-un all set to write history. We'll get you a heads up. Welcome back. All eyes are going to be on the historic summit between US President Donald Trump and North Korean leader Kim Jong-un in Singapore tomorrow. CNBC's Nancy Hungerford joins in with the latest. So all eyes on Singapore tomorrow, Nancy.
Historic summit by many measures. In fact, the first face-to-face meeting between a sitting U.S. president and a leader of North Korea. Now, both leaders did arrive here in Singapore yesterday, and they've been busy ever since. Kim Jong-un did meet with the Prime Minister of Singapore, Lee Hsien-loong, last night, and then now U.S. President Donald Trump has since met with Prime Minister Lee right here in Singapore. Now, after that meeting, President Trump sounding very optimistic about his upcoming one-on-one with Kim Jong-un. In fact, he said he does think it will work out well, sees it working out nicely. A very different tone than what we heard coming off the back of the G7 meeting, as you point out. But in order for this meeting to work out nicely, we're talking about a few key objectives here, because the U.S. continues to maintain that it wants complete, verifiable, irreversible denuclearization on the Korean Peninsula. That is the demand for North Korea. North Korea's own state media agency, KCNA, has come out today talking about the objectives of the meeting as they see it. They, too, did talk about denuclearization, but first, they said they're looking at a durable, long-lasting peace commitment. There's been suggestions as to whether or not we could see, in fact, a peace treaty of sorts signed here. President Trump speaking at the White House just a few days ago after he received that letter from Kim Jong-un did say that they were working towards peace. They want to normalize relations. But he did kind of set the bar a bit low by saying this could be just the beginning. It's really a long road when it comes to normalizing these relations. So many of the experts we've been speaking to today here in Singapore said don't necessarily expect an overnight agreement on what denuclearization or a peace agreement looks like, but do expect some kind of announcement on how to get there going forward.
All right, Nancy, thank you very much for that. Well, the big global event that is dominating the headlines, of course, beyond the summit in Singapore, is the tumultuous G7 meet that we saw over the weekend, and, of course, the summit that's taking place in Singapore. We did catch up with the brain trust of Standard Chartered Bank, Global Chief Economist David Mann, and the head of Global Macro Strategy and Forex Research, Eric Robertson, to understand what they think of the global economy in the current setup. Take a look.
It's been the case for a number of years that the more relevant entity is really the G20. Even though it contains arguably too many economies, it does at least include the ones that are more relevant in terms of accounting for a large share of global growth. These days, Asia accounts for about 60% of world growth if you use PPP exchange rates, and in the G6+1, they're not in there. So I think the amount of attention that's given to communiques coming from the G7 over the years has been going down, certainly compared to 10 or 20 years ago. So in that way, I don't think you'll get a big market reaction. Also, I don't think they should be too shocked that we have seen this sort of more animosity created by some of the tensions through what usually are usually never the case with these allies.
But expectations were already running pretty low, right? I mean, that they will be to begin with the joint statement in the first place. But, well, we got that. And then, I mean, we got Mr. Trump's tweets.
That's right, and it's therefore no one's really too shocked that whatever the statement ended up being was one that did not get the full support of the largest or most significant member, because we are in a different world in terms of the way that all of these norms work compared to what we've been used to. That's right.
Eric, will this roil forex markets more? I mean, emerging market currencies have had it pretty bad this year.
No, I don't think so. And you're correct. It's been a volatile year for emerging markets, but I don't think the tweets from President Trump over the weekend will necessarily exacerbate that. We've gotten used to an environment in the markets where, you know, Trump has made it very clear that he wants to operate, whether it's with trade or other treaties, other negotiations, on a country-by-country basis. And these large multilateral organizations, he believes, are inefficient. So I think this is really more of the same. I think we've got some bigger issues to think about for emerging markets, whether it's the increase in U.S. interest rates or the strength of the dollar recently, oil prices, etc. And obviously we have a rather important summit in Singapore this week.
David, but it's very clear, I mean, as both of you also agree, that he's made it clear he wants to deal with issues country by country and not on these big forums, right? So what does that really mean? I mean, the existing order, as many have put it, is sort of up for renegotiation completely, overhaul?
Well, we've already been going down that route of just piecing together like a giant spaghetti mess, all of the different individual bilateral deals to try and then figure out, can we then turn that into something at least regional and then link the regions together. The WTO process, for example, has been stalled for a lot longer than President Trump has been in office, and protectionism as a trend, that's something that was well underway even 10 years ago. We've been counting the number of protectionist measures taken by various countries over the last 10 years, and actually the US has been implementing more measures than anybody else. So that tend towards being a little bit less into the let's just use up all the low-hanging fruit, it's already gone, has already been gone for quite some time. I think what we're focused on now is, can you at least resuscitate some of those regional deals? And I would say the jury is still out on that, but expectations, certainly what does it matter for the markets at this stage, are very, very low. I think the thing that the markets are more worried about is, do you end up somehow in some sort of negative trade war spiral? And on that front, there are signs that are sinister, but also some signs from what we look at that actually, even on the US-China relationship, that they would like to get a win-win situation rather than spiral downwards.
What is the #1 issue for markets? I mean, forex markets and other markets, according to you, right now?
I think there's two. The first of which is the Federal Reserve and how far they will lift interest rates.
Sure.
The increase in U.S. interest rates since, let's call it September of last year, has been around 100 basis points in 10-year yields, and more than that at the front end of the curve. So we have seen a significant flattening of the U.S. yield curve. I think for emerging markets more specifically, the increase in the dollar and the increase in oil prices at the same time means that in local currency terms, oil prices have gone up dramatically, and the potential spillover to inflation has now forced some of the central banks in Asia and other emerging markets to raise interest rates to defend their currencies. And I think that's something the markets have struggled with.
Fair enough. But if he were to, as David mentioned, get a trade war spiral, right? I mean, the common view right now is that Mr. Trump is a smart man, he's been a businessman, this is all negotiation, and his opening sort of gambit is pretty tough, and then he kind of sort of waters down, he backtracks, etc. What if other countries were to do the same, and then if it spirals out of control in that sense? I mean, would that be a big worry?
It is a concern. For the moment, I think our view is that it remains what we would call a fat tail or a black swan event. I think, as David mentioned, most of the countries involved in these negotiations have taken a very interesting approach, which is to focus on industries or sectors in terms of their retaliation measures, which may garner large headlines, but in terms of the overall economic impact would still be relatively small. Now, if we can stay within that construct where there is a tit for tat, such that both leaders or countries can go back to their voters and constituents and say, we have achieved this victory in our trade negotiations, I think we can avoid that fat tail event. But the risk is still very much out there.
Any way to put numbers, probabilities to this kind of thing?
Well, it's always very hard on probabilities. I would say the probability of having a worldwide trade war of the type that we saw in the 1930s is extremely low. And the main reason I say that is that right now there's really been one main source of the issues, and it's been the US. Others, for example, even with the TPP negotiations, even the RCEP, there are at least some versions of it still out there that people want to continue along that path. There is a coalition of the willing. So it's not as if you have everyone saying, oh, well, it's working for the US, let's all do this. I don't think you're going to go down that path. I think everyone else would rather just ride this out, take the assumption that actually let's follow the actions rather than the words, and there's a big difference still between the two, and focus in on the fact that actually it's still in our interest to continue to stay as globalized as we are, especially with supply chains being as complex as they actually are. One point we make on why we think the US would be suffering itself from doing anything too overly draconian is that the US itself is the 4th biggest supplier within the supply chain of what China sells to the US.
Okay.
So this is a big difference compared to, say, a long time ago where you didn't have such complex supply chains where everyone was so interdependent. And I think that recognition means that people do want to avoid the worst case.
All right, let's move on now. On Friday, Max Life walked out of the race to acquire the 6,000 crore rupee deal for IDBI Federal Life. CNBC TV18 now learns that IDBI and Federal Bank failed to respond on certain critical prerequisites that were raised by Max Life. Now, this may even derail the deal for the bidders that are still left in the fray. Let's get some more details going. We have Yash joining in. Yash, what is the latest?
Well, Surabhi, before we move forward, let's just understand where does the IDBI Federal Life deal stand after Friday's development. So on Friday, Max Life informed the exchanges that they have decided to walk out of the 6,000 crore IDBI Federal Life deal. Even the parent company, Max Financial Services, said that they've dropped the plan of raising approximately 5,000 crores, which they were intending to do to really fund and support this particular acquisition. Now, what we're given to understand is that the reason why Max Life really went out of this particular deal, Max Life had placed and laid down some prerequisites, and internally they had set a timeline of 48 hours to receive a reply from the sellers, which are IDBI Bank and Federal Bank. The sellers in this particular situation failed to give any sort of reply to Max Life, and that's the trigger for Max Life to walk out of this particular deal. Now, as far as the second and the last buyer in this particular deal is concerned, in that case, Aditya Birla Sun Life Insurance, one needs to remember that that company has also placed similar prerequisites to acquire 100% stake in IDBI Federal Life Insurance. What are these prerequisites? Of course, an exclusive bancassurance tie-up with the branches of IDBI Bank and Federal Bank, a 10-year period to this particular tie-up, and performance guarantee. What I'm given to understand is that the sellers will not be in a position to really put these prerequisites on the agreement in the form of paper, in the form of a written translation between the two parties. And in that situation, there is a high possibility that Aditya Birla Sun Life Insurance may again have to reconsider its decision of this particular acquisition, and this deal may really face a strong and a big hurdle at this very point.
Okay, Yash, thank you for that. But also do explain to us how the India First deal was perhaps similar in certain ways to IDBI Federal Life.
Right. So I am, from the very start of it, not suggesting that the India First life insurance deal was the trigger or was the reason why Max Life backed out of IDBI Federal Life deal. But just as a comparison, let's just look at these two deals. In both these companies, that is India First Life Insurance as well as IDBI Federal Life Insurance, the most important element and the most valuable element rather was the bancassurance distribution network which both these companies have. Let's just look at India First Life Insurance first. Warburg Pincus just 10 days ago acquired Legal & General's 26% stake for about 710 crore rupees, and that transaction valued the company at around 2,700 crore rupees. Now, if you look at the bancassurance network which India First has, it's got a strong bancassurance network of Bank of Baroda and Andhra Bank of about 8,000 bank branches, which means they are acquiring 8,000 bank branches for an amount of valuation of about 2,700 crore rupees. At the same time, IDBI Federal Life Insurance, it's got a total bank assurance network of about 3,100 branches, which is much less as compared to India First Life Insurance, for which the buyers are willing to pay 6,000 rupees. So in every possible way, this deal was really expensive for the buyers in terms of assets which it got. Again, I am not stating that this was the main trigger, but of course, certainly a point which the buyers would have looked.
All right, thanks Yash very much for those details. Let's take a quick break. On that note, on the other side, Kishore Narne of Motilal Oswal Commodities will be joining in with a couple of commodity trading ideas. Welcome back. Well, there's a high-profile meeting that's been in focus today. Okay, before we get to that, there's news coming in on Infosys to delist its ADRs from Euronext Paris and Euronext London. So it seems that those depository receipts will no longer trade on some of those European bourses. That's an interesting development. We'll get back and try and get some more details. Let's see if the company's offered any rationale for this. But that's what we are getting at the moment from Infosys. Let's just see if we're getting the price of the depository receipts. That is, of course, the that's the overnight, I think that's the American ADR that's showing up, but the ones that will be delisted are the ones from the European bourses. But back to that big meeting that we were talking about, Interim Finance Minister Piyush Goyal has met the Power Minister on the resolution of troubled power assets, and the stressed firms are to present their cases before the ministries this week. Anshu Sharma is joining in with some more details. Anshu, the market is waiting with bated breath to figure out exactly what the government has on its mind when it comes to stressed power assets. What can you share with us now?
That's right. So, interim finance minister as well as full-time coal minister met R.K. Singh, power minister, and they have discussed the Allahabad High Court order, which has stayed the circular given out by RBI on Feb 12th. The circular meant that even a day's default will lead to resolution of these stress assets, and that is for the entire sector and not specific to just power sector. But now we understand, after the press conference that was done by Piyush Goyal, he said that banking secretary will convene a meeting between the finance ministry officials as well as power ministry and the RBI officials, and will have representation from Association of Power Producers on the same. So apart from this, there was some other discussion held on coal shortage and e-auction and commercial mining of coal, which is also like some of the issues because of which the power sector assets are reeling under financial stress. Back to you.
Okay. All right. Thanks very much for that, Anshu. Well, on that note, let's move to the promised conversation on commodities. We have Kishore Narne of Motilal Oswal joining in. Kishore, first let me start by getting your call on crude and whether you have a trade there.
Yeah, we have a trade in crude. I think fundamentally crude still remains bearish with US pushing more and more oil into the market again. At the same time, I think as the markets try to discount that the coming of OPEC meeting would be a turning point where the production can be increased. So I think for the day, one can look to sell crude at around 44.40 kind of levels on MCX with a stop loss of 44.85 and a target of close to 43.70. But I think if you are looking at a week or kind of a thing, probably 4400 could be possible on the downside.
Okay. A call on precious metals. How are you looking at both gold and silver now, Kishore?
I think short term there is a little bit of pressure on dollar. I think with the concerns of trade war going on, I think that should be positive for gold. I think one can look to buy August gold at around 31,080. Again, a very small range of trading. 30,940 could be the targets on the upside, with 31,330 as a target and 30,940 as a stop loss. Sorry.
Okay, Kishore, we'll leave it on that note then. Thanks very much for joining in with those commodity bets. Well, with that, we're completely out of time on this edition of Closing Bell. Stay tuned after the bell coming up next.